little bit, but after the 550-point rally that we've seen in this series itself, well, I guess that's par for the course. Individual stocks, though, are going to be in focus. And to help us out with that, we're joined by Ajay Botke, who joins us on the show. Hi, Ajay. Good morning. Ajay, I want to ask you about Nykaa. That one, in fact, the numbers looked quite good. What's your view on the stock? It's recovered a fair bit from the recent lows, but how would you approach it?
Good morning, Nigel, and thanks for having me. I think the numbers, have been far better than market expectations, and especially, in the light of the gloom that one saw just 6 months back in case of the new age companies. I think the performance of companies like Nykaa as well as Zomato has really taken the market by surprise. So I am constructive on selectively on in this space, but preference still remains with the Zomato, although the stock has doubled from the recent lows that one saw 6 months back. But I still that there's still some room for growth out there, and the allied businesses that they've acquired are the ones that are mainly firing, and hence my preference remains with Zomato over Nykaa.
Okay, preference remains with Zomato over Nykaa. But Zomato, Ajay, has had a very strong run, right? It's up almost 90% in the last 6 months.
I know.
You're not concerned about that? You think it's still worth buying even at this price?
Yeah, because I think, as I mentioned, I think the allied businesses, I think, are expected to have a far higher runway. There's a lot of pessimism when the acquisition happened in case of Blinkit. And I think the numbers that are being posted for last 2 quarters clearly show that the pessimism was unwarranted. And hence, in my opinion, there's still some room for the stock to run.
What's your view on Honasa Consumer, Mamaearth? That's going to be the big one the street is watching. It saw an overall subscription of about 7x. But how do you expect its life as a listed company to be? Because we know peers, the new age tech companies, went through a very long period of a downturn, a slump, and now they've started recovering. Your thoughts on Honasa Consumer and the way they've priced it?
I think I would advise investors to be extremely cautious on Honasa. Sheer valuations at which the company has IPO'd, I think makes me extremely worried about any further commitment. Again, out here, although the opportunity size is pretty large, but the margin of safety from an entry perspective, I think the company, in my opinion, and I might be wrong, has not left much on the table. The re-rating scope for the company is simply not there, and hence I personally feel that the company, the entry point would be at a substantial discount to the current market price. The pain that some of the new age companies went in when they listed at very high valuations, I think, in my opinion, I won't be too surprised if the investors who have enthusiastically piled on to Honasa at the current valuation might have to endure that pain before the stock starts running up. So there has to be at least time correction, if not price correction in Honasa. So hence, I think investors need to be very cautious out there.
Okay, all right. Ajay, what about a couple of numbers that came overnight? Emami, Crompton Consumer, how do you view those numbers?
Nigel, I think I am very positive on Emami. I think I see the stock, the medium term, moving up to, say, 690 to 700 rupees. And if I dig deep into the numbers, then although the volume growth continues to remain tepid on the domestic side at 2%, the overall revenue has grown at 6%, but the international business has fared quite well. In CC terms, I think there's 16% YOY growth in international business. And also, if you look at the brand-wise, I think the Dermicool and Navratna have been the peak performance they've had, a very strong 12% growth. But there are some pain points out there, and the company needs to work. Like Oro Plus, for instance, has been down 4%, and the pain management business has seen a tepid growth of 1%. What is positive in case of Emami, like in many other FMCG companies, is the sharp drop on a YOY basis in commodity prices is clearly fed into a sharp improvement in the margins. So one has seen a very sharp 345 basis point up move in the gross margins and around 300 basis points improvement in EBITDA margins. If I look at the numbers, I'm penciling in 24% growth in earnings for this year, followed by, again, a good clip of 17% next year and 20% in FY26. How it is trading? I think it's trading at a reasonable 25 times 1 year forward, and the ROEs are still very strong at 34% current year and around 39% for the next financial year, going to 43%. So I feel that investors should use the opportunity to get into Emami and with a medium-term price target of between say 700 rupees over 12 to 15 months.
Okay, got it. Thanks a lot for that. Ajay, just stay on because we have a conversation lined up with Paras Defense. I just want you to listen into that and then give your comment as well. The way forward. Ajay Bodke is still listening in. He's our expert sitting by. Ajay, any thoughts here? I mean, Paras Defense has had a very good run. I think in the last 4 or 5 months, it's up about 40%. Any thoughts on the stock?
Sonia, this reminds me of a very famous quip by Ronald Reagan: trust but verify. I think if I look at the numbers till in the first half, I think in the second quarter, the revenue growth has been very tepid at 10%. The operating margins are at 25%, and the net profit growth is only 7%. Now, the company has, in the interview, said that they are confident that the fourth quarter will be the force multiplier, and they are expecting between 30 and 40% growth. And margins also, they're expecting to move up from 25 to 30% for the full year. So I think one needs to keep a watch because a large number of these stocks in both defense, railways, and space have already, in my opinion, discounted a lot of positives. And now it is the stage for these companies in these sectors to actually implement and show the numbers. So I would be cautious, especially in view of the 40% rise that the stock has seen, and frankly, a very tepid performance in the current quarter.
All right, we'll do one thing. We'll take a short commercial break. Ajay, stay on. We'll come back in a bit. We also